Good morning, my real estate brothers and sisters, and attention, all self-employed borrowers and people that are thinking about buying with self-employment income. I've got some announcements to make. First of all, rates are amazing right now, and so it's such a great time to buy. Couldn't be a better time. I mean, real estate's really just kicking up right now into the summer, but there's a couple of changes that I wanted to bring to everyone's attention. So if you're an agent or you're somebody that's self-employed, listen up. This message is for you. I'll try to be brief, but this is really, really important information. As of June 11th, Fannie Mae and Freddie Mac have made announcements and changed their guidelines on self-employment borrowing. And so this is huge changes. So basically previously to June 11th, if you were self-employed, you could provide us a P&L, which basically was something that you put together, your CPA put together, letting us know what your profit and loss was for the time that you have not filed your returns. The changes that have occurred now is that they were allowing us to provide that from the client, letting us know, but now they are making us get business bank statements from the borrower backing up the P&L. This is a big change. So if you, the only other thing you can do besides providing business bank statements, so what they're gonna do is look to make sure that in your business accounts or your personal accounts that you are actually showing the income in there that you're stating on that P&L. They're making you back it up. Before we were just providing the document that you'd put together with your income. Now you've got to prove it. The only other way is that you could get an audited P&L from your CPA, but that costs money. It could be like a couple grand. So this is a huge change. If you are a real estate agent, you need to really be focusing on asking your borrowers, your buyers, if they're self-employed. If they are, it's going to be really, really important to put them with a good lender who can take a look at it and make sure that they are fully pre-qualified, pre-approved. We're going to see some things happening here in the next couple months because of this. Deals can fall through in underwriting. If they're not fully reviewed and vetted, we're going to see some fallout, guys. So it's going to be very, very important that you put your self-employed buyers with a great lender who's going to be able to look at this ahead of time before you're already under contract. So the change is with conventional loans. The government loans, basically the rules are going to be that we can use a 2-year average from the last return, but if you filed your 2019 returns, you get a 5% haircut on that amount. If you've only filed your 2018 returns with an extension, it's a 25% haircut on the income that's provided. So these are changes due to COVID. The changes made because people are worried about people's income, and so we all need to be prepared, have each other's backs, and get through this time and make it a great summer and take advantage of these low rates right now. Call me if you have any questions. 512-524-7006. Jenny.Rivera@NRLmortgage.com. Thanks.